Today, the SEC makes its case to appeal the recent Ripple XRP ruling. Representative Maxine Waters says she's deeply concerned over PayPal's new stablecoin, and IDX Digital Assets CIO Ben McMillan breaks down what's driving crypto prices right now. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies trading slightly lower today. As of noon Eastern, Bitcoin dipped 1%, trading around $29,400. And Ether was little changed, around $18.50 for a second straight day. XRP, however, dropped by 3%. Okay, let's kick off the headlines with more on XRP as the SEC plans to appeal the recent court decision involving that token. In a letter yesterday, the agency asked a judge to let a federal appeals court review the decision that Ripple did not break the law when the crypto firm's XRP token was sold on public exchanges. The SEC argued that the outcome of an appeal had implications for its ability to enforce securities law and for a large number of other lawsuits. For years, the agency claimed that most cryptocurrencies are securities and that it has the power to regulate them. No word yet if the judge will let the SEC appeal that decision. Next, one of the largest publicly traded Bitcoin miners just dropped its second quarter earnings report, revealing mixed results. Riot Platforms beat analysts' expectations for profit, according to FactSet, with an adjusted earnings per share loss of 17 cents. Revenue, however, came in short of analysts' expectations. In its filing yesterday, the company wrote that it expects to benefit from growing consolidation in the Bitcoin mining industry this year. Riot traded down more than 5% as of noon Eastern, but so far this year, shares are up more than 360%, benefiting from Bitcoin's strong performance. Last, Congresswoman Maxine Waters says she's deeply concerned about PayPal's new stablecoin. 2 days after PayPal introduced its new dollar-pegged stablecoin, PYUSD, the top Democrat on the House Financial Services Committee revealed this statement, saying her concern stems from the fact that the fintech firm chose to launch its own stablecoin while there's still no federal framework for regulation, oversight, and enforcement. The California representative noted that PayPal has 435 million customers around the globe. That's more than the number of online accounts of all the largest banks combined. Waters wrote that given PayPal's size and reach, federal oversight and enforcement of its stablecoin operations is essential in order to guarantee consumer protections and alleviate financial stability concerns. The House committee recently approved legislation aiming to create consumer protections for stablecoins. That bill is now eligible for a floor vote in the House. All right, on to our main story. After PayPal's move to dive deeper into crypto by launching its own stablecoin, Crypto World's Talia Kaplan spoke with Ben McMillan, the founder and chief investment officer of IDX Digital Assets, for his take on markets. He also weighs in on what the push from big names in finance to file spot Bitcoin ETFs means for prices.
Last time you were on the show was back in March, where you discussed your crypto outlook amid a crypto crackdown. Since then, that crypto crackdown has been amplified with the SEC suing Coinbase and Binance. But we also saw some good news with regulatory advancements here in the US. And of course, we saw a signal of confidence from Wall Street with all those filings for spot Bitcoin ETFs. So what do you think is the main driver for crypto markets right now?
So similar to March, the story this year has really been the macro backdrop. What's good about the regulatory developments that we've seen is we've started to kind of work through some of that regulatory unclarity, which was keeping, I think, a lot of the big institutional money off the sidelines. So when you look at things like the BlackRock ETF filing, for example, that's very encouraging because that's a very big player in the space who's not looking to be first to the market like some of the other ETF filers. They're looking to stay the biggest in the market. So the very fact that they're even filing a spot Bitcoin ETF means they themselves are at least comfortable with some of the regulatory clarity or the outlook for regulatory clarity going forward. So, things like that I think are encouraging. The conclusion of the Ripple lawsuit, I think was encouraging, not necessarily because it was a quote unquote win for alternative tokens, but just because it was such an overhang for so many years. This has been an open question for investors, particularly as it relates to whether or not to classify, cryptocurrencies as securities. This Ripple lawsuit has been a big question mark. So even to just get some, irrespective of what the outcome was, although it was favorable for altcoins, just to get some clarity, a conclusion to that, I think is starting to give institutional investors some comfort that, okay, we're working through this regulatory backlog, and that's going to provide some clarity for a path to higher prices going forward.
Let's go back to those spot Bitcoin ETFs, that signal of confidence from Wall Street in Bitcoin, really. What do you think that could potentially do if it does, in fact, get approved by the SEC? Do you think it could potentially spur a Bitcoin buying spree, as investors could potentially see Bitcoin as more of a trustworthy asset with Wall Street's backing?
Yeah, I think what's interesting is, spot ETFs themselves, that idea has been around for a while. I think what's as interesting or perhaps more interesting is, the fact that it's BlackRock. They're so big that they have to be looking at putting this in portfolios and things like 401ks. And so it's part of, I think last time we spoke, we mentioned this idea of kind of the mainstreaming of crypto. And so, things like payment, on-rails, fiat on-ramps to crypto, for kind of everyday users. And so this is just part of that. Right now with Grayscale, when we talk to institutional clients, they already know about it. It's kind of more of the echelon of, yes, it's a retail vehicle, but it's more the domain of people that already understand, the state of play, so to speak. All of a sudden you have a group like BlackRock, filing for a spot Bitcoin ETF. If that gets approved, you have to imagine that starts showing up on the menu of options for a whole new swath of investors, like, retirement funds and things like that. So that is what's, really structurally very bullish, I think, long-term for the mainstream of crypto.
So PayPal this week launched a dollar-backed stablecoin. What does that signify for markets?
So again, that's a very, I think, structurally bullish for the idea of mainstreaming of crypto as an asset class. Stablecoins have long been kind of the, where Main Street meets the crypto ecosystem. That's where, a lot of folks have thought that, the onboarding, so to speak, of a lot of, kind of non-Bitcoin, maxis, for lack of a better term, would happen. And so, what's interesting about PayPal is they're in the payments game. So, we have to remember, of course, Facebook went down this route with Libra, which they then changed the name to Diem. Regulators quashed it pretty quickly, the Fed in particular. And that was around the idea of, Congress was uncomfortable with, among other things, the fact that tech companies shouldn't be getting into the crypto space. And so, when you look at something like PayPal, yes, technically they are a tech company, but they are in the payments game. And so, I caution the PayPal enthusiasm where it's structurally a very good sign long term. They do have some regulatory hurdles they have to clear, but I think that they're relatively well poised to do so. I also think this is important for the regulators because this now forces Congress and the regulators to, I think, take a little bit more thoughtful approach to stablecoin regulation. If we go back a year or two ago, it was kind of very quickly dismissed as, the famous line in Congress about, Bitcoin being the domain of money launderers and illicit activities and things like that. We've gotten, I think, the Bitcoin, the crypto ecosystem has done a good job of, frankly, lobbying Congress and educating Congress as to the importance of, CBDCs, the importance of crypto for America's growth long term. I think the language and, some of the executive orders out of the White House reflects that. And I think this is a further forcing function that, again, regulators in Congress are going to have to contend with the fact that stablecoins and crypto are here to stay. So let's put some regulatory clarity, some thoughtful regulation around it to open up the path for the future.
So last week, Coinbase released its second quarter earnings report, which revealed that crypto trading revenue dropped as the SEC turned up the heat against the exchange. Also last week, Robinhood released its second quarter earnings report, which revealed that crypto revenue dropped 18%. And of course, in that quarter, Robinhood delisted several tokens, including Polygon's Matic token, Solana's Sol token, and those tokens were mentioned in the lawsuits against Coinbase and Binance by the SEC as alleged securities. So what does that signal to you?
So that is ground zero right now for, I think, the crypto regulation is exactly that, whether or not these tokens are securities. So the SEC has come out and said Bitcoin is a commodity. We're not touching that. It looks like Ethereum might get a pass as well, and right now the focus is on, particularly after the Ripple lawsuit, whether or not these other altcoins, particularly these big ones that you mentioned, constitute securities or not. And so Coinbase and Robinhood, I'm not surprised trading revenues are down. That's going to be a function of the macro environment. 2022, let's not forget, was, just a really rough year for all risk assets, crypto in particular. I think it's going to take a little bit of time for those trading revenues to come back. I think that's also why we're seeing those companies start to pivot into things like asset management, which, makes sense from a corporate perspective. But, back to the kind of the spotlight on the regulatory issues that matter now. This is it. What happens to these altcoins? What constitutes securities? Because that has really big knock-on effects for all the other institutional players in the market, ourselves included. We manage products in the space. And so we're looking at, whether or not coin X is determined as security or not impacts, how we put that in a vehicle to deliver to customers. So the knock-on effects are huge. And I think this is the last piece of the regulatory puzzle, frankly, that has been an overhang for years, where we need to see clarity. Now, the good news is things like the Bitcoin spot ETF can, kind of have a fast track to move along outside of this. But I think that there's going to be a big focus on these alternative coins, particularly on these exchanges, whether or not they're listed, how they're listed, going forward. And that's the biggest regulatory overhang we have, I think, right now.
Ben McMillan also weighed in on why major cryptocurrencies are stuck in a tight range amid the current macro environment. You can watch more of his interview over at cnbc.com/cryptoworld. That's all for the show today, but we'll be back again tomorrow, and we'll see you then.